Hi, this is Kevin Kerr for Money and Markets TV. It's often said that the best time to buy anything is when it's at a low price. And one sector that's offering some great buying opportunities on the cheap right now is energy. Oil prices have been rising all year, and they got so high in June, in fact, that the Obama administration released 30 million barrels from the Strategic Petroleum Reserve. But in the aftermath of the debt debacle and the downgrade by S&P, crude oil is pulling back dramatically. The decline is mainly due to concerns over an even deeper recession in the US and Europe, and a possible bubble bursting in China. However, I think the drop in energy prices is a short-term gift, and it shouldn't be squandered. The reason that the long-term trend for oil is up has to do with the theory of peak oil. In a nutshell, it says that the supply of fossil fuels, including oil, is finite, and that the production of oil has already reached its peak and is now declining. I would specify that this theory applies to the oil that's easy to get to and refine, but sour crude oil and the extremely deep ocean fields cost a fortune to reach and develop, and even more to refine. The bottom line is, supplies are dwindling. That means demand and prices are likely to rise again very soon. Now is a great time to capitalize on that coming move. And I want to tell you about an action plan that will allow you to do just that. Step number one involves oil. Many major energy producers, drillers, refiners, and equipment makers are trading at bargain prices after the latest decline. Don't be afraid to buy them at these levels, because they're sure to appreciate in the long term. But oil won't be enough to assure that we're able to maintain our quality of life in the future. Which brings me to step number two, alternative energy. Look for technologies that have a real possibility of widespread adoption, including natural gas, solar, wind, and others. These stocks tend to get hit hard when oil prices drop, so you should be able to find plenty of great deals right now. Just remember to stick with the companies that are already producing a product. Step number three is investing in rare earths. These minerals are the power source in many of the current and possibly future green technologies that will become so vital in meeting our energy needs in the coming decades. And step number four is nuclear energy. The disaster in Japan underscores the risk of this technology. But the fact remains that there are few power sources that are as cost effective as nuclear. One way to play this sector is with uranium stocks, but another is with rare earth element companies that produce thorium, which could replace uranium as the nuclear fuel for the 21st century. So, what's the best way to play these four corners of the energy market? Individual stocks and ETFs can certainly offer good opportunities for profit, especially now that many of the prices have pulled back. For example, take a look at the ProShares Ultra Oil and Gas ETF, ticker symbol DIG, DIG. If you want to invest in nuclear, consider the Market Vectors Nuclear Energy ETF, ticker symbol NLR. And the PowerShares Clean Tech portfolio, ticker symbol PZD, might be a good option if you're looking to play on green energy. But my favorite way to play the markets is with ETF options, which offer you leverage on ETFs and limit your risk. They're the tool I use to help my Master Trader members seek gains in any major asset class in the world: energy, stocks, precious metals, commodities, bonds, and even foreign currencies, no matter what event or trend is happening in the world. For Money and Markets TV, I'm Kevin Kerr. Thanks for watching.